presentation contains current opinions of Moe Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Moe's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone, and welcome to the Compak Asset Management YouTube update for September 19th, 2023. It is FOMC Fed week this week, and that is going to be the main mover of the markets. Again, let's start. I'm Mo Ansari, president of Compak Asset Management, host of Market Wrap, the daily broadcasts that I do. It's a 1-hour broadcast that I do every day with great guests. You can get the daily edition of Market Wrap simply by going to compak.com, the website, and you can download the app, or you can go to the App Store and type in Market Wrap with Mo Ansari, the complete word, Market Wrap with Mo Ansari, and that will bring you to the app. You can download that to your iPhone. You'll get the daily edition every single day. Don't forget to do that. And for this, don't forget to subscribe, so whenever I do a YouTube update, you will be notified. Let's start with the market. That's what we're going to take a look at. The economy, technical analysis, and the week ahead. Well, it's this week, not next week, that is going to move the market. It is the Fed. That it is the expectation that tomorrow they're going to announce that they are not going to make any interest rate changes. There's a 99% probability no interest rate increase tomorrow. But there's still about a 30% probability that they're going to raise interest rates by 25 basis points in November. That is the question. Are they done or are they not done? That is the question that needs to be answered. The ECB came out last week and said they are not going to, they are just about done raising interest rates. Tomorrow we hear from the Bank of England and the Bank of Japan later on this week, and tomorrow from the FOMC, the Fed. Now, what are they going to say? We are seeing a slowdown in the economy. We are seeing inflation continue to go down, even though we did see a slight bump in the inflation rate, but overall we are going down. The job openings is coming down. We have a number of strikes going on. We have the UAW strike that is going on. That is going to slow down the economy. So, and the Fed has already done a lot of interest rate increases. Are they done or not? Or do they want to do one more? I don't think that makes a big difference, but psychologically, for the market to break out of this range that it has been in between the 43.35 and 4,600, if it needs to break out, we need some specific news that the Fed has done. The market is implying that the interest rates they're going to start cutting rates by the second quarter of next year, bringing rates down. I don't think they will bring down unless the economy slows down dramatically, unless the unemployment rate goes up. As I've said for the last year and a half, since the beginning of 2022, and we're nearly coming to the end of 23, I've said no recession. Everybody was looking for a recession. I said, look, as long as the unemployment rate remains low, people will continue to spend. And as long as spending continues, the economy continues to grow. That is what drives the U.S. economy. 2/3 of the U.S. economy is spending. And it is, as we saw retail sales, they were 0.6%, much higher than expected. People are still spending. Even though now they've spent all the money they saved during COVID, and they are doing all the spending on credit cards, but they're still spending. That's the thing. Looking at the markets overall, small caps have underperformed. You can see this. This is small caps outperforming, small caps underperforming. You can see since the beginning of 2021 or middle of 2021, we've seen small caps underperform. Small caps are smaller companies. They go up when the entire economy is growing, but they don't do as well when the economy is slowing. And that's what the small caps are still saying, that the economy is going to slow down. We don't know when, we don't know how. I think the biggest fuel for the economy has been federal spending. The government is spending $2 trillion more than what it takes in. That's deficit spending. How long they will continue? I think they continue through 2024. After the election, if the Democrats win the White House back again, whoever the nominee is, if they do that, then they're in the second term. They're not going to get worried about re-election. All they have to do is go in and do the things that are best for the country. That usually happens in the second term of a presidential cycle. We'll have to wait and see. But in the meantime, government spending, there's still a lot of it out there, continues to propel the market. Looking at the economy, core inflation rates headline year over year, you can see that it popped up a little bit right here last month, but you can see the core rate continues to come down. That is what is that's what the Fed looks at, is the core rate. As I've said, I think inflation will continue to go down until the next year, especially with shelter prices coming down, rent coming down. That is going to turn negative at the beginning of next year. I will be in Scottsdale on the 18th of next month. If you want to come for the free seminar, I will be there in person to answer your questions. Technicals, you can see that we've been in this range right here, just going back and forth, about 45.80, 44.84 is the resistance. That's the blue line right here. That's the 50-day moving average, and this is the red line is the 20-day, and you can see that we are below. This is just below the close today. We're still below the 20-day moving average. We need to get above 45.80 and then 46.07. That's the intraday high. If we can get above that, then we're headed to March high, which is 46.37. A break above 46.37, probably headed to the highs. Break below here, 43.35. We could get down to somewhere around here, 42.75 to 42.80. Major support is at the 200-day moving average, which is 41.86. Looking at the weekly charts, again, 43.96. 4,400 is the 20-week moving average right here. This red line is what I'm looking at, and that's going to be support right there on the weekly basis. This is wave 1, wave 2, and wave 3. If we can get above this 46.07, then 48.18, which is this high right here from the beginning of 2022, that will be the next target. And if we can get above that, then we're looking at 5,000 to 51.50. That's the projection, Fibonacci projection from this high to that's what the target becomes, is about 5,000. Will we get there? I think by next time, sometime next year, we could be there if we don't have a major recession prior to that. NASDAQ dailies, 13,881 is the number. We are at 13,657 going into the close today. That's the 50-day moving average. Here's the 20-day. If we can get above this 14,650 is the overall, and then the target becomes 15.3 to 15.7 if we can break out. This is wave 1. We've just gone through this ABC. Once we do a 5-wave top, then we go through a corrective phase, and that's what we've been in since July. Now, weekly chart support at 13,420, resistance 14,450. If we can break out above that, then we become somewhere around 14,000, close to 15 is what I'm looking at. But overall high is right here, and I don't have a projection from here to here yet, but I'll put that out in the next couple of weeks. As long as we stay above the 13,000 mark, we're in good shape as far as the NASDAQ goes. The only concern is this: we're starting to break out of this 4.33. Today we are at 4.365. That is a lot higher. We're starting to break out. If interest rates break out to the upside, that'll be negative for the stock market. As you remember, last October this of 22, the interest rates went to a high, the stock market went low. You can see in March, interest rates went up, stock market made a low. Here we are right at resistance. Tomorrow is an inflection point. If the Fed decides to say that they're going to continue to raise rates, interest rates break out to the upside, we could drop to the 43.35 area for the S&P or even lower. If the Fed says we're done, or any hints that they're closing the door, maybe they'll leave it ajar just a bit, but if they say they're closing the door or raising interest rates, market takes off and it sets the September low. But we're still in the middle of September. We still could have another week or so, or 2 weeks before we finally make the bottom. But this is the time frame where we mark a bottom and start moving up again. Keep that in mind. But the interest rates are going to be the key. Watch that, the 4.3536 area for the 10-year note. Gold stuck in a range. If we see interest rates going stabilizing, gold could break out. Gold has looked pretty good. With all the negative news in gold, it has still held up for the last couple of weeks, which is a good sign for the market. Crude oil is another fly in the ointment. We're pushing $95 a barrel. Those are these highs right here, and we got very close to that today. We might start coming back down from here. If we do, from this 94 area, and start turning down, that would be good overall. Those are my views. Those are my thoughts. Again, if you need help with your portfolio, go to compak.com, compak.com, and we will be more than happy to answer your questions and set up an appointment for you. I will be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compak Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that overfocus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.